Dave, you had a really cool article that you posted. Well, cool, I would say is maybe the wrong word. An interesting article with regards to we've been talking about builders and, appraisals coming in light and, prices shifting and so on since they bought. And you had an article about, it was a Toronto area buyers walking away from deposits on new homes. I had a story very similar to this in Ottawa, but I'd like to hear kind of your review on the article, and then I can tell that story if it's relevant.
Yeah, no, pretty straightforward, just more in the GTA, a lot of single family homes in the suburbs, things like that, where the prices have dropped off or they're not able to qualify, or the appraisals just not hitting value, that people are having to unfortunately walk away from massive deposits. And some, in the case of, $300,000 and more down is what they put as a deposit. But because of where values came in on that appraisal, or them not being able to qualify, that they're just leaving that money on the table and hoping the builder doesn't go after them for any more, and just kind of, again, just walking away. That they're kind of doing that analysis of, well, yes, we're into it for 300,000, but do we really want to be into it for 600,000 out of pocket instead? So they kind of, unfortunately, are having to make that decision and then it becomes, the builder becomes in a tight spot as well, right? Like they've already started these projects. They put a lot of capital into these as well. And so it kind of has a trickle effect, because these places don't close and what these contracts are signed at, then those builders are out the money as well, which then slows down developments kind of as an overarching for an area.
And most homes, well, I shouldn't say this, but I mean, I guess we don't know what this looks like yet in terms of if they're going to resell at a lesser amount. So they have, let's say it's 2 million for easy numbers. Let's say the home was 2 million. There was 300,000 down. So they're leaving that deposit, or not down, the deposit, walking away. So that's 1.7 million. So now, do you think the sellers or the builder is going to be able to resell that property at 1.7 million?
Well, I don't think they can, because if they start advertising and pricing too low, that's when they start shooting themselves in the foot, and it continues to snowball, because then appraisals on other product
are
people sign a contract are affected. Appraisers value, they look at what something's listed at, but they have to look at what the past 3 months sales have been, the 90-day sales in that area of resale, and compare it to that as well. And they'll assign values. If, let's say a property sold in the last 90 days in the area that was built a year ago or 2 years ago, they're looking at that value. They're assigning an increase in value because of being a new product, or square footage or bedrooms or anything like that. But they do keep in mind, and they do pay attention to what that builder sale price is, but they have to look at what's transacted on the open market, and take that into most account. But so for builders, they don't want to have the prices being dropped substantially, because then the people that are signing, that already have contracts signed, they've shot themselves
that are actually going through with the purchase.
Yeah. And then that's where, I think we talked about it a while ago on another episode, was a lot of builders, at least that I know in Ottawa, they were instead of dropping their price, they were trying to, in January and February of this year, buying down the rate.
Right.
So instead of the rate being in the fives, they were offering, rates of, 3.5% or whatever it is, because instead of dropping their price by $50,000 or $100,000, they instead put that into the rate buy down, so that their price was still kept up, but that savings was just going into the rate to incentivize people.
And I wonder if these, depending on how much this happens, are some builders going to file bankruptcy, or when everything kind of, balances out a bit, are they going to go after the buyer, regardless of whether they drop their deposit for more money, for carrying costs, whatever legal fees, all that stuff?
Yeah,
I wonder if that's going to happen. Because that's not
that's a possibility, right? I mean, people don't realize that just because you're sacrificing your deposit doesn't mean you can't be that builder can't go after you.
2 years to come at you.
Yeah, for if they can't sell that property, or the difference between what you've signed the purchase agreement for, and this isn't just builders, this is any resale purchase agreement too. If you've signed a purchase agreement and it's firm and you walk away you might only have a $10,000 deposit, but if they sell that house for $100,000 less, well, they can go after you for that difference of 90,000 plus the closing costs, plus. And so a lot of people think that it's just the deposit they lose, but it's not always the case. And to your point, like 2 years is what they have. So, I mean, it's possible that the builders go after them before that. I think it becomes, how much are they losing? Are they losing
overall?
And then it becomes like, okay, well, if we're not losing, then we don't want to tarnish our name either. It'd be known as the builder that litigates.
Yeah.
But if they are put in a position where they're sitting on tons of product and just, losing millions of dollars, then I'm sure they would have to start looking at what that cost benefit analysis is of litigating.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe because we'd really like that.